All right. Hello. This is gonna be the weekly market outlook for July 15th to July 19th, and I do want to start off with reviewing this previous week's trades, and yeah, let's dive right into it. Music here a little bit. All right. So, okay. So last week was July 8th till July 12th, and I'll do like a really fast market outlook, or not market outlook, sorry, very brief trade recaps. So on Monday, coming into Monday, I had in mind that we were probably going to consolidate and create a daily fair value gap. So the reason why I say this is on NQ, this was what price was like on a Monday. So notice how this is Monday's trade, before even coming into Monday, I anticipated for Friday's high to be taken, and we took that out about right at open. So after we take out that Friday's high of day, I anticipated this on Monday to create this daily fair value gap. So it was either we are going to expand higher and leave this fair value gap a breakaway gap, just because how much we expanded on a Friday. Monday was either going to be consolidation day or just another continuation. So that's what I had in mind coming into Monday. And after prices took out previous week's high, I switched to the lower time frame models. And the trade I took was based off of the 15-minute power of 3. So notice how this 15-minute candle closed here, and we didn't close below this 1 hour fair value gap. So I was anticipating for us to continue to go higher. So based on that 15-minute power of 3, I went onto the 2-minute time frame, or sub 5 minutes, to find any supporting fair value gaps. And there was a 2-minute FEG that supported the idea of us taking out that 15-minute high. And on the 1-minute time frame, I take my entry at the 10:15 open. So prices actually dips down to this 2-minute FEG here once, but I don't take the initial entry because I'm waiting for the 10-15 minute candle closure. So after the 10:15 open, we dip down into the 2-minute FEG again, and that's where I take my entry, and I'm targeting the 15-minute high. So this is a 1.4 risk to reward ratio. So I'm going with about my stop loss should be about a $480 stop loss. So you guys can count or do the position sizing there. But yeah, I do believe this trade ended up being a losing trade, and this is the trade that I would take almost always. But the thing is, we already taken out previous day and previous week's high. So yeah, we already did take out previous day and previous week's high. So higher time frame, we already completed our objective. The next trade coming into that, the next trade after that was based off of this 15-minute power of 3. So we actually we retraced lower here. After I got stopped out from my first trade, we traded lower, and we didn't take out London lows or Asia's lows, and we instantly got a displacement back up above. So we created this 15-minute power of 3 here, and this was going to be a breakaway gap, just based on the 15-minute closures here. I go over the reason why I believe this is a breakaway gap on my fair value gap theory. So if you guys want to check that out, it'll be on my YouTube. But yeah, I based my second trade on Monday on this 15-minute power of 3 here. So there's a 2-minute fair value gap here that prices created that supports the idea of us taking out that 15-minute high. And notice how we created that 15-minute power of 3. We created that 15-minute power of 3 after coming into a 10-minute fair value gap. So we displaced away from this 10-minute fair value gap. There's this question that I created that may help you guys understand what I'm talking about. It's, why did we create that power of 3? So I'm not gonna take every single power of 3 model that there is, but it's the reason why did we create that bullish candle closure. So the reason why we created that power of 3 was we traded back inside a 10-minute fair value gap and we displaced higher on the 2-minute time frame. So here's me refining my entry on the 1-minute time frame. So I take my entry on that 2-minute FEG. I have my stop loss at this low here, and I'm targeting the 15-minute high. And my next trade that this week is on Tuesday, and on Tuesday I was already anticipating poor price action. The reason being is because we took out Asia's lows and highs. So we took out both Asia's sessions highs and lows and London sessions highs and lows. Sorry if you guys hear any music in the background. My dad's doing karaoke. That's completely my fault. I can't do anything about that. So this trade I took was based off of the 4-hour FEG and how the 1-hour and 4-hour closed. So notice how this 4-hour closed here. We came into a 4-hour FEG and we had this bullish closure. So I can anticipate for this 4-hour high to be taken, right? So I based my trade off of the 15-minute power of 3 because I don't want to take my trade off of purely based off of the 4-hour power of 3. I want to refine my entry so I can, mitigate risk and have just a better entry. So I based my entry off of the 15-minute power of 3 because it's in confluence with the higher time frame. So on the higher time frame, we can anticipate higher prices, right? So I want to take the same narrative but go on to the lower time frame. So like I said, I'm taking the trade based off the 15-minute power of 3. I entered at the 3-minute FEG, and look, you can see here how I got stopped out. The next trade I do believe is another losing trade because I chased that 4-hour objective move. So after I got stopped out on my first trade on Tuesday, prices actually ends up reversing again, and we do end up accomplishing the 4-hour objective. So after we complete the 4-hour objective, I note out, okay, look at this 15-minute power of 3 now. We just took out 4-hour highs, but like based on this 15-minute power of 3, I can anticipate higher prices. And there's a 5-minute FEG that supports the idea of us going higher. So I take my entry again at the 5-minute FEG, but this time I take my entry at the 10 o'clock open. So because the 10 o'clock open is is inside the 5-minute FEG, I take it just so I can mitigate risk just a little bit. And I got stopped out here again on Tuesday. And I think that was when I called it. I quit trading the New York AM session, and I just moved on to the lunch session because, like I said, it's really back and forth. Just unfortunate price action. One thing I could have done better on this trade is that after taking out the 4-hour objective, I shouldn't have continued to chase that move. But it's like one of those situations where I live and I learn. So the last trade on Tuesday was, so after we took out, the 4-hour high, we actually displaced lower. After continuing lower here, and after the New York AM session closed, I was trading the lunch session. So notice how when I'm trading the lunch session, that means the New York AM session is over. That means now we have new liquidity that we can target. We have new session-based liquidity. So we have that New York AM session low and New York AM session high. So I take my trade based off of this 15-minute power of 3, right? And on this 15-minute power of 3, I can anticipate the low to be taken. And there's a 3-minute FEG that supports the idea of us taking that low. So on the 1-minute time frame, as soon as we open at 12:30, we dip back inside that 3-minute FVG. I take my entry and I take off partials at the 15-minute low, and I have runners running to that New York AM session low. So that was, my final trade for Tuesday. I was 1 for 3. And my last trade this week, I do believe, was on Thursday. And Thursday we did have CPI. So on CPI, I was anticipating this daily high to get taken here. So once we did take it, I wanted to see how we would like trade there. So notice how this hourly candle closed like super bearishly. So this right here already is confirming, okay, this is almost a liquidity sweep. I can anticipate a liquidity sweep because of this power, this 1 hour power of 3. But I don't take this initial move down because like I said, I'm not trading before 10 o'clock. I just let prices do like its thing right at the 9:30 open, and that for that first 30 minutes, I'm just watching prices. I'm just on the sidelines. So I base my trade here actually on this 30-minute power of 3 here and this 15-minute power of 3. So they both have the same objective. That is part of my time frame alignment. It's my second theory of the time frame alignment concept. And this breakaway gap here, I noted, is the same concept again. It's that fair value gap theory, and I have this fair value gap theory on my YouTube if you guys want to check that out. But so I'm targeting that 30-minute and 15-minute low. I am anticipating this 15-minute fair value gap to be a breakaway gap, and on the higher time frames, I am anticipating a rebalance of this daily FVG here. So I have the higher time frame in confluence with the lower time frame, so the internal and external draw is the same. So I want to go on to the lower time frames, sub 15-minute, because I'm not trading with the 15-minute in mind. I'm trading with the 5-minute PDA right now. So there's a 5-minute fair value gap. I take my entry at that 5-minute fair value gap. As soon as we enter it, and notice how we have this respect of the consequent encroachment. This respect right here is, again, prices showing its hand to us. After I noticed how we respected the 5-minute fair value gap's consequent encroachment, I was like, that was like my my confidence, my conviction to hold this trade for full terminus. So this trade ended up going pretty well, and I ended up the week pretty off, or I ended the week off pretty strong. And so those were the trades that I took this past week. And let's go on to next week and the market outlook. And again, I'm so sorry if the music, you guys can hear the karaoke outside. I'm so sorry, my bad. So next week it's going to be, we don't have any, we don't have FOMC, CPI, PPI, anything like that, or NFP. So we can anticipate, a pretty easy. I don't want to say easy, but we don't have any news events that are gonna take prices, completely in one direction. So we do have some red folder news on Monday. So this Monday I'll be live streaming. We have red folder news on Tuesdays as well, and on Thursdays. So this week, we don't really have anything crazy. So don't expect too much of not that much volatility coming to this week. So let's get right into my market recap for this week, shall we? Oh, one thing I do want to cover is the pros and cons of the week that I did the previous week. So one of the pros that I did was I waited for prices to show respect to that 10-minute fair value gap. So this goes back to that trade I did on July 8th, 2024. And the key thing that I learned from this trade is that, or not learned, but I kept in mind, was that we displaced from a key level. Whenever we displace from a key level, this gives that power of 3 concept even more of confluence, because like I said, why did we create that power of 3? It's not because any random reason we created that power of 3. We created it because we came into a key level. The second point that was a pro during this week that I noted out was I was patient after taking 2 losses during the morning session. So this goes back to Tuesday, how I took 2 losses in the morning session, and then I waited and I sat out the rest of the New York AM session, and I traded during the lunch session because now we had new targets being New York AM session liquidity. And some of the cons this past week was when trading a 15-minute power of 3, I should not be using a 1 hour fair value gap as an entry. The sole reason why I'm entering on the lower time frames is to mitigate risk. But if I'm going to trade a 15-minute power 3 and I'm using a 15-minute, or if I'm trading a 15-minute power 3 and I'm using a 1 hour fair value gap, that just that increases my the risk parameters. And because like daily candles, hourly candles, they tend to have larger ranges because they have more time to to get created. So like I said, I should have been using a lower time frame relative to the 15-minute time frame, not going a time frame above the 15-minute time frame. I should have gone a time frame below the 15-minute time frame for an entry. So that was one of the cons. The second con was I should not force any long trades, no matter the setup, when we are at all-time highs, especially when trading them, when basing the model on a 15-minute power of 3. So this goes back to the Tuesday trade here. After we took out the 4-hour objective, and we are like I said, we're continuing to make new all-time highs, I shouldn't base a long trade at that point based off of the 15-minute power of 3, because trading all-time highs is already like low probability. It's just not. It's not the it's not the ideal thing to do. And like I said, after we took out that 4-hour high, I should have stopped trading there and then and just purely watch price action on the sidelines. And that's my second con. So something to note, and just something I can learn from going to next week. So this week actually, so now I'm going to start the market outlook for July 15th and July 19th trading week. So I always start my trading or my weekly analysis on the dollar. So on the dollar here, we had a pretty bearish week on the dollar. We took out previous month's low and previous week's low. I'm sorry, not previous week's low. We took out previous day low and previous month's low last Friday. So, I am anticipating a continuation this upcoming week on the dollar. Notice how we closed below a daily fair value gap, and we also created a daily SIBI of our own too. So we are bearish on the dollar. It's just the thing to watch out for is we are trading inside a weekly fair value gap again. So there's that weekly fair value gap here. If we are bearish, I would like to see us, trade below this weekly fair value gap here. And I would like to see us go trade lower if we are bearish and disrespect this weekly fair value gap. So what I have noticed that we failed to take out previous month's high, and we just took out previous month's low last week on Friday. Dixie is now trading back inside a weekly BISI again, and if we disrespect this weekly BISI, we will most likely continue to see lower prices. We have displaced away on the daily time frame. So when I say displaced away, I mean we have created new fair value gaps on the daily time frame. And coming into this week, I am anticipating for us to take out previous week's low just based on the weekly power 3. So like I said, based on this weekly's power 3 here, I can anticipate for this weekly fair value gap to be a breakaway gap, and for us to take out this previous week's low first before even retracing. So this goes back to the fair value gap theory that I have. I don't anticipate something like this to happen. I anticipate for us to take out this week's low, and then wherever, however deep we want to retrace. But yeah. So if we're seeing bearish price action on the dollar, we should be seeing bullish price action on NQ and ES. And let's go down to NQ now. So NQ, I said I always want to start off with the higher time frame objective here. So on this weekly power of 3, just purely based off of this weekly power of 3 here, what can we anticipate? A retrace back inside this weekly fair value gap. That's what I'm probably anticipating coming into this week. So I am anticipating for us to retrace into this weekly fair value gap to see if we can retrace into here and to continue higher. But yeah, so like I said, we created a weekly fair value gap, and I am anticipating for us to rebalance that weekly fair value gap based on the fair value gap theory. So notice how we closed this week, or previous week, we closed within this weekly candle's high, and we created a fair value gap. So I am anticipating a rebalance inside that weekly fair value gap. We also had SMTs here too, so let me just mark out that SMT. So this is the SMT that we had with ES. We had SMT there. So if we are to see bearish price action, I want to see us I do not want to see us take out this high here, because this is the SMT high. So I want to see this high respected. And like I said, once we retrace back inside that weekly fair value gap, I would switch to trading lower time frame models, because once we retrace back inside that weekly fair value gap, that means the weekly objective as of right now has been completed, and then prices will show on the lower time frames if we're gonna respect that weekly fair value gap or not. So like I said, yeah, switching into lower time frames once the weekly objective has been met. And we are still bullish, just overall on the weekly time frame. We are still bullish. We haven't yet seen any price action that would deem us bearish. So bullish is still the case on the weekly time frame. But that doesn't mean that we can't can't trade shorts. It's just we have to understand that you have to have a certain objective for the shorts. We can't be targeting we can't be trading shorts all the way down here to the 14,000s. That just there's no logic to that. But if it's a logical short idea, then you can take it. And same thing on ES, about same analysis on ES as well, is it's just a little bit, I'm not too sure here on ES, because yes, we did create a weekly fair value gap here, but the thing is, notice how we closed this past week. I am not anticipating for prices to retrace inside this weekly fair value gap just based on the weekly closure. I am anticipating for us to take out previous week's high first. It's just I'm not sure when, and when I don't know when prices will take out previous week's low, or I'm sorry, whenever I don't know when prices will take out previous week's high, that's when I go into the lower time frames to get a better understanding. So I would rather trade NQ here, just in comparison to ES. See what I said on ES. So yeah, we created a weekly fair value gap. I'm not anticipating for us to retrace back inside that weekly fair value gap, but anything can happen, so just keep that in mind. The weekly objective here on ES isn't as clear as NQ, so how NQ's weekly objective is a lot more clear. ES isn't as clear as NQ, so I would rather trade the ES model. And that's probably it for me, and that's probably it for my market analysis, my weekly analysis. The last thing that I do want to leave off today with is if we are to consider the monthly power of 3, this week could be a continuation of the monthly expansion higher. So like I said, whenever we see Dixie going or trading lower, we should be seeing higher prices on NQ. So if we just keep that theory or like thought in mind, then since we already created the low of the week, or if this is really the low of the month here, then we should be seeing higher prices. That third and second week usually is the expansion weeks, and the last week of the trading month is like a retracement. It's either going to be a retracement or consolidation, something like that, just based on the power of three. Because if power of three, there's this concept where the open is like accumulation, and then there's a manipulation, and then there's the expansion. So I want to trade the expansion, and I am anticipating, or not anticipating, but we could see this next upcoming week to be an expansion week. So just keep that in mind. See if I have anything else. I think that's gonna be all for my weekly market analysis here. If you guys do have any video ideas, make sure to type them down in the comments, and I'll create them if I have good knowledge on them. If not, then I'm not gonna create them. I just there's no point of me creating a video I don't have much knowledge about. So yeah, just shoot down any concepts that you guys might have in mind, and maybe I'll make the video over them. I'm sorry if today's video is a little bit poor quality. There's music playing in the background, and yeah, I'm sorry. I'll be streaming tomorrow morning, so make sure to check that out. And with that, I'll see you guys next time. Peace out. Bam.